you got Jermaine, you got Romeo. This is like a Drake candle. So we get a massive Drake candle, a few Drake candles, right? Look for levels with price history.
Levels with price history.
Yes.
And then see if it breaks through one of those levels.
What? Are you okay?
Give me a second here, dude. I'm fucking dying.
Baby, come back to the way it used to be. I was wrong, and I just can't live without you. All right, guys. So today I'm gonna be teaching lead singer here. Just kidding. Not a lead singer quite yet. He plays guitar well though. But this is my best friend and roommate, Mr. Andy Vogel. So today I'm gonna be teaching him how to trade. We're gonna go through everything step by step. He's gonna be asking me a ton of questions. So I think this should help a lot of you guys out too. So a lot of you guys that are struggling beginners, you probably have these same questions, if I had to guess. And what do you know about trading so far?
I don't know shit.
Like,
I've lived with this kid for 2 years, and I've never taken the time to actually learn it. And I'm a dummy, so this is gonna be fun.
So this is gonna be fun. So lucky for you, like I think the way I teach trading is pretty fucking simple. Okay. You know, like there's a lot of like complex like strategies out there. Like people fall into like I call it like the death loop of YouTube videos, where they're on YouTube looking up how to trade, and they're just watching like 1,000 videos. Okay. You know, and they just end up right back where they fucking started. It's like information overload, right? So the way I teach is pretty simple. It's replicable, and it prints. So we're gonna jump into it. All right. So the first thing that you need to understand is market structure. So market structure, in short, is this market trending to the upside or is it trending to the downside, or are we consolidating, right? So if you were to look at this chart right here on Bitcoin, like what do you see price doing? Like what trend do you think we're in?
It's going up.
It's going up, right? So you're correct. We're in an uptrend. It's not that fucking difficult to tell, right?
No,
it's just
it's easy enough.
yeah.
Not that fucking stupid.
Okay.
Yeah. Here we go, dude. I'm 1-1, dude. I'm on fucking fire.
No, you're on fire. Okay. So I'll kind of explain the technical reason as to why we're in an uptrend as well. So if we go to a weekly time frame here, you know, we use something called higher highs and higher lows to dictate, you know, whether we're in an uptrending market or a downtrending market. So if I take a look at Bitcoin here, I can see that pretty much from the bear market bottom in November of 2022, we've been consistently making higher highs and higher lows, right? Like, yes, we've had periods like last year where we did kind of consolidate for a little bit, but we didn't break weekly structure. You know, we're not losing what these are called protected lows or like the major pivot lows. So for example, like we could technically come all the way down here on the weekly time frame and still be in an uptrend, still technically be bullish, right? Because this is the last, you know, major pivot low. So until we actually lose this low, now it would be this low right here because we've made a new one. So until we lose this low and close below, we're still in an uptrending market. So on a higher time frame, our bias is going to be long until proven otherwise. Right? That makes sense?
Yeah, that makes sense.
So, you know, for example, we broke out of this most previous high, right? And we displaced to the upside. So that gets into number 2, which kind of goes hand in hand with market structure, which is displacement. So when you see price breaking market structure, right? Let's say we're going into replay mode here, right? We understand, again, we're in high time frame bullish market structure, right? Making higher highs and higher lows. We have this previous high here, right?
Okay.
That we're looking to break out of. All right, so we'll let price play out a little bit. Okay, we're edging, right? Let me speed this up a little bit. And then boom, right? So this is like a Drake candle right here. Like, you ever seen the Drake leak?
He's got a fucking hog.
He's got a hog, right?
Yeah,
So we would call this like a Drake candle, right? This is like a displacement move to the upside. It's not like a little tiny little. It's not like what you're packing, right?
Yeah.
Where it's like a little, and then
yeah,
it just
like
like
a little baby fucking.
It's like a little
candle.
fucking periwinkle, right?
Yeah.
This is like a Drake candle. So we get a massive Drake candle, a few Drake candles, right, closing above this previous high. So that would be considered displacement, meaning price displaces, like gets put out of place almost, and just explodes to the upside, right? Does that make sense?
Yeah, it's just a noticeable uptrend, right?
A noticeable break of structure. Like, you don't have to guess.
And this
okay,
is structure.
This is the most recent structure high that we're breaking out of. So as soon as we see this move here, like this is a confirmed breakout. You know, like it's obvious. Like we're creating space between that previous high, that previous structure high, and the current price, right? Like from here to here is a noticeable amount of space. Okay. So this is a confirmed breakout. Now there's something else which is a little bit more advanced, but I'll cover real quick, which would be a sweep. So a sweep of a high would be price breaks out a little bit and then fails. Okay. That's called like a swing failure pattern. So the market makers just absolute fuck everyone who tries to break out long. But since we had multiple candles closing above this high and we actually displaced above, this is a valid move where we can look for an entry. Now, a lot of new traders, they'll see a move like this and they'll try to hop on board. Like, oh, let me just FOMO long, because price is going parabolic. Right. We're going to the moon. We're going to Valhalla. Send it. And that's a mistake, because even though we're in an uptrend and price is making higher highs and higher lows, we still want to wait for a discounted entry or a retracement, because price always retraces, even in an uptrend. Like I mentioned, even though we're in an uptrend, we've had 15 to 20% retraces on the way up, but it's still bullish. Okay. If you were to just FOMO buy every time there's a few massive candles.
So is this considered a sweep right there?
So let me show you on a lower time frame, possibly. We actually never swept this high here. So a sweep would be we actually come above it and then fail it.
Okay, so yeah, this would have to go up.
So this would have to go up,
yeah.
Right? So but we never actually swept this high. We just consolidated below, which is actually a bullish formation here. Okay, so we're talking about market structure. Okay, so we broke this high, right, with displacement. So this validates this move right here. This is a textbook move. This is all you actually need to become a profitable trader, is to identify this move right here, where we break out with displacement and we get a retrace. The only reason longs are actually valid here is because we got this massive move breaking to the upside, and then we got that retrace after.
Okay.
So next we want to look for now is a key level, right? So we're actually going to go to like a lower time frame because there are some better examples here, okay? So a key level is a support or resistance level, okay, in short. Actually, there's a better... I'm just going to try to find like the best example I can. So there's actually one level on Solana that's really good. Okay, so go to like a Solana on a weekly. So a key level is just a level with price history. Okay. So price history, like I talk about that all the time, like price history. Like what does that actually mean? So all price history is multiple reactions from a certain price or a certain zone in the past. So I just drew the zone because I can just kind of eyeball it, right? I should have tried to let you draw it, but we'll do that after. So you can see here, right? Price reactions level 1 says resistance, flips to support, right? Bounces support, and we bounced recently from this level of support once again.
Okay.
Right, so the way that we can predict the price's future is based on the price's past. So there's a really good analogy that I like to use for this. Take like a chick, right? She's hooked up with like 1,000 dudes before.
She's gonna do it again.
She's gonna do it again.
Yeah.
You picked up on that instantly. Yeah, perfect. So if she hooked up with 1,000 dudes, right? Like this is her past right here. Okay, you got Jermaine, you got Romeo, you got DeQuavis. You got Alfredo. Like, who knows?
Yeah, whichever the lowest one's, like Deshaun or
something. Like Deshaun or some shit. Right, so she's banging all these dudes, right? So now, right, we displace up. Price is coming back down to you, to Andy Vogel.
Yeah.
And you're getting her.
Not that low, though.
Well, you're pretty low, dude.
Lower than Deshaun?
You're lower than Deshaun, dude. So you're down here, right? So we got Andy Vogel, but she's coming over to the crib. Right. Okay, and you've been texting her.
And she's clean.
And you don't know if she's clean, bro. I can't promise you that.
You just gotta see it through.
Yeah, you gotta see it through, right? So she's coming over to your crib, right? Based on her past experiences that right? All these dudes. What do you think is going to happen when she comes to your crib at 2 a.m.?
She's sucking and fucking, right?
She's doing something, right?
Yeah, okay.
So she's doing something. So it's the same with price. It's actually the exact same with price, right? Like that prices respect to this level 20 times in the previous, few months or whatever. So that when price retests this level once again, you're most likely going to get a reaction from this level based on the price's past. So that's the only predictable way to, what am I trying to say? That's the only way to predict the future, is what I'm trying to say, is based on the price's past. If you don't have data, if you don't have any price data, it's hard to make a guess on where price is going.
Okay, and you always look at this on like the long time scale. Like it looks like you got like November, pretty much all of 2024 here.
So this is on a weekly time frame. So higher time frame levels are going to be respected more than lower time frame levels. Okay. But I still use these same levels on a lower time frame, which I'll show you in a second. Okay. And I'll have the algo as well, but we'll cover that at the end. So we have this key level, and this is a perfect example in real time. We have this very key level, came down to this level, tested it, and we're bouncing from this level once again. Which, if you know what you're doing, and if you're an actual profitable trader, this should have been a pretty simple long entry, and this is where we longed in the Discord. A sweep of this low. So we actually went down to a lower time frame, going back to what you were saying, and we're looking for confirmations to enter the trade. So we covered market structure, key levels. Okay, something else I like to do. Okay, this is good. Is a sweep. okay, or a swing failure pattern. Okay, this is getting a little bit more advanced now. A little bit more advanced, but I think we get it. Okay, so a swing failure pattern. First of all, we've already established that we're at a high time frame level right here, right? I just removed it, but we're at a higher time frame support zone, right? I'll keep it on the chart for now, right? So we're at a high time frame level. Now we want to drop to a lower time frame for entry. So you can enter on a higher time frame, like a weekly, but like you're gonna be holding that trade for months, and like the risk to reward isn't as good.
Right.
So risk to reward just means like what you're risking, like this little red box, right? What I'm risking in order to like what I could potentially make. So for example, on the Solana swing long, we were risking, let's say $1,000, whatever 3 to 5% of your portfolio is, to make, our take profits at around 190, 200, to make 4 times that. So if I'm risking $1,000, I'm risking that to make $4,000 if the trade goes my way.
And this is all leveraged.
This is leverage, correct? Okay. Yeah, this is leverage. I mean, you can do spot too, but like if you're gonna do spot, then you have to put in like 10,000, like multiple tens of thousands to make a decent amount. So why would you do that when you can just leverage the exchange's money and you're putting up less up front? The only kind of downside to leverage trading is there's something called fees, right? So you have like the maker and taker fees. When you enter it, you pay a fee to the exchange in order to borrow from them.
Okay.
Which like it makes sense, right?
And then once you sell it, did they take anything?
There's also a sell fee.
Okay.
So there's a buy fee and there's a sell fee. Okay. So if you're trading spot, there still are fees, but it's not as bad as the leverage fees because you're not borrowing any money.
Right.
Like this is like kind of like taking a loan out from them essentially.
Yeah, they gotta make their money.
So let's say you're trading with leverage, you can't lose more than you put in on a leverage trade, which is good. So let's say I put in, $1,000 here of my own money, and I'm using 10x leverage. So there's $10,000 going into this trade. I can only lose up to $1,000. I can't lose all of the 10,000.
So that's like what? It drops 1% and you're fucked?
So yeah, exactly. So on 10x leverage, yeah, if it drops like a few percent, like I get liquidated.
Right.
It would be 10% in this case, right? Because you're on 10x leverage. So if price reaches here, then I get completely liquidated, meaning I lose all of the $1,000 that I put in.
Okay.
Right. But if it goes your way, which is going our way right now, you're up a decent amount.
Right.
4.6 times what you would actually be risking if you were to do 10x leverage on that trade.
Okay.
Does that make sense?
Yeah.
So yeah, that's a intro into leverage, which we can actually get into the exchange too and like how to enter, but that's pretty simple. So okay, going back to entry, right? So we have our weekly level. Now we need to find an entry on a lower time frame. So I'm just going to remove this zone just to make the chart a little simpler. This, okay, is called a swing failure pattern, okay, or a failure and reclaim. This is one of my favorite entry triggers. So we call it a trigger is like your thesis behind entering the trade. So if X lines up, then I will trigger the long position. Okay. You know what I'm saying? So I just call it like an entry trigger. It's like, what do you notice, right? I went to replay mode. What do you notice about price right here?
I mean, it went under your line.
It went under the line. Yes. It went under the line. Now I'm gonna play one more candle, right? One more candle.
Now it's above it.
Now it's above it, right? So you see how we kind of did like a fake out there.
And is it well, keep going actually.
No, say it.
Is it because it's, and you're going to have to point your thing to it, is it because it went under that bottom candle wick?
So it's under this wick right here, actually.
Okay.
So this is the previous structure low. Remember going back to market structure, right?
Right.
So on a high time frame, actually Solana's in a consolidating market on a higher time frame. If you go back to like a weekly, we're kind of like ranging here, right?
Okay.
But we've already established that we have a high time frame key level here, which is again a level with price history, right? And then down to a lower time frame, we're in a downtrend on a daily as we're coming into that support zone.
I get it.
Right, because we're seeing, again, structure break. If we go up, right, losing these lows, closing below.
Yeah.
And now we're doing lower lows and lower highs.
Yep.
Right, you see lower low, lower high, lower low, lower high, lower low, lower high, lower low. But this time, this is a little bit different, okay? Because even though we're still doing technically a lower low, we swept this low. So we didn't displace, remember like displacement, like fat Drake candles going down below it?
Right.
We didn't do that here. We did like a few candles barely below, and then we immediately reclaimed. So this is called like a bullish reclaim here, or a swing failure pattern. Meaning bears tried to push price down, but buyers stepped in, and they don't want to see price below this low. There's too many buyers here. Okay. That's what's happening in the market, Like buyers are willing to step in at, $100, psychological level. People want to buy at $100 Solana. They don't want to see it go below here.
Right.
If bears try to push price, they're just going to buy it up.
Yeah.
So this is like a bottom formation, right? So as soon as we reclaim this low, creating a swing failure pattern, we can enter a long position. This is actually a really good long position. Now, there's something else I like to look at too when I enter a trade. I always look at this when I'm trading failures and reclaims, okay? So this is a little bit different than the 1-2 setup, which is, I'll show you that one after. These are like the two main setups I take. So we're gonna go down to invite-only scripts. So you obviously know I have my own trading algorithms that I've developed, right? Mm-hmm. So I got the easy algo indicators, which I'll show you, which actually marks out these levels as well. If I turn on the chart levels here as well, you'll be able to see it. So you see here, we have all the levels marked out, right? Resistance, resistance. And we actually reclaim that blue level as support. Mm-hmm. So kind of doing what I just showed you. So I have my own set of algos. The oscillator is this weird like ribbon thing that you see at the bottom.
Yeah.
Right, you have a ribbon here. So this shows the momentum in the market, or like the buying and selling pressure. So as price is making this lower low, right, and then reclaims, what do you see here on the momentum? From when momentum was over here, down at this low, right here, to here, to that lower low. What do you notice?
I mean, it's an uptrend, right?
It's increasing, right?
Right.
Like this is lower than this point right here.
Okay, so those points are the bulls.
Yeah, the bullish divergences.
The bullish divergence is higher at the end of it.
Yes. So pretty much this is just a discrepancy in price and momentum. So they're doing the opposite. So price is making a lower low, technically, while momentum is actually increasing to the upside. So this is just showing that buying pressure is increasing here, which is just another form of confluence that we should go long. So confluence is just an indication that price is going to do something that we want to do. So like a confluence could be like a key level, a confluence could be like a swing failure pattern, a confluence could be like a bullish divergence. And your goal as a trader is to stack as many confluences or indications in your favor. Because if you have 10 different things pointing in one direction, that's a high probability trade, as to only one thing pointing.
Okay.
So the more confluences that you have, the more confident. That's a banger. More confluence is the more confident.
Yeah.
I just put it up in the fucking spot. But it's true, right? So now you can actually enter this trade confidently because, okay, we're at a higher time frame key level. We've swept this low. We've reclaimed it. We have a fake out here. The bears try to push price down. The bull stepped in. And we have momentum increasing. Like, this is just an A+. This is what I would call an A+ long setup. Okay. So A+ just means high probability. This is like 10 times out of 10 I'm going to take this trade. And 9 times out of 10 it's going to hit my take profit. So now I'd enter the trade, I'd enter right here, and I'd put my stop loss. Where would you put your stop loss here, like your invalidation in this case?
Are you already doing it for me?
No, I'm asking you. Because it could be right here at this low, right? Or it could be here at this low, or it could be here at this low. Like,
if it breaks that market structure there, isn't it supposed to just dump again?
Yes, that's actually good. That's actually right. Yeah, so what I would do here, and what I did in the swing long, is I have what I call a hard stop loss right here at this wick. So this is my stop loss, right? If it hits here, I'm out. Okay, because now my thesis, like the reasoning why I enter the trade is wrong.
Yeah, it's out the window.
It's out the window because it already invalidated my idea. Because my whole idea in entering here is that it's going to go up, and that this was the bottom. So if it hits here, then I'm out. There's no point in me holding and praying, oh, maybe it'll go up when I'm already wrong, right? I'm wrong, I walk away. So my stop loss is going to be here. However, I have a soft stop loss at this low. So the reason I don't put my stop loss right here at this low is because these markets are very volatile. They could push it down one more time for a retest and it'd still be valid. Right. It could do something like this.
Still be good long.
So I don't want to get stopped out here before it continues up and I'm right anyway.
Yeah, you want like a chance to look at it again, right?
I want to have a little bit of buffer room here just in case of volatility.
Okay.
But if I get like a strong close below this low, like a daily close below, then I'll just manually close the trade.
Okay.
But that's a little bit more advanced. But for simplicity purposes, our stop loss is here at this wick, at the swing low. That's like a pretty standard place to put your stop loss when you're entering a trade. It's just always at the most recent low. Because your whole point entering the trade there is that it's not going to come back down to this low.
Yeah,
that's like my invalidation every single time. That's like my reference point. So, okay, cool. So now I'm going to enter the trade, and for my take profits, I'm just going to target these previous structure highs, meaning this previous high here, this previous high here, and then my main take profit is going to be somewhere around here.
Okay.
Right? I like this high right here. So something like that.
Yeah, I think I bought Solana like at fucking 179.
179. I mean, it's like at your entry right now, if you think about it. Well, we're in replay mode now, but right now it's at like 179.
Is that where it's at now?
Yeah.
I haven't really looked at it, but
it's around there. So, okay. Cool. So we're entering the long position, right? And once we enter the position, we want to let our thesis play out. So what a lot of people will do, I'm going to turn off my AI signals. We also got an AI signal on the algo, but I'm going to turn this off for now. So actually, I'm going to turn the mild by too. So I have more confluences on my easy algo indicator that I coded, just for more confluence, right? So not only are we getting these bull divs on like a lower time frame, even going on like a 6 hour, we're also getting an accumulation buy signal, right? We're getting these, you see these little X's here?
Yeah.
Just mild reversal. Price may go up from here. It doesn't always do that. Right here, for example, we got a mild buy. Price didn't really go up, but we're not at our key level. Like we were waiting for a sweep of this. So now we're just stacking confluences, like stacking all the indications in our favor, right? That's using the easy algo indicator. So let me try to turn this off for a sec. So what a lot of people will do here, once they're in the trade, is they get emotional. They try to like micromanage the trade while they're in it, right? So price might go up like one candle or go down. They close the trade. Yeah. There's a retest, right? Remember we said we want to keep a little buffer in case of retest. Right. I'm just going to let price play out. See, some people, boom, would take profit right here. Because it's going in their favor. They're going to take profit quick.
Shitting bricks. They saw it jump under their last retest.
Yeah.
Like, I just need to take profit.
I just need to take profit here.
That's what I do.
But
I'm sitting here like, take it, dude.
Yeah, take it. But here's the issue, right? See, a lot of traders and even trading coaches on YouTube will say the same thing. They'll say, if you got profit, take the profit. But that's wrong. Because here's the thing. Let's say I take profit here. What... Are you okay?
Give me a second here, dude. I'm fucking dying.
Are you good, bro?
Yeah, man. I fucking went down the wrong pipe.
Okay.
That was good shit you were saying, too.
Okay, I'm gonna run it back. Okay. Right. I was like looking over you like you're
dude, I'm like trying to hold it together. Good night.
Like trying to hold in your cough.
Dude, I've done that so many times.
Okay.
It's one of the most embarrassing things you can do. Sitting there trying to hold in the cough and like keep it together.
But you just can't, bro.
It's like knowing you got diarrhea and you're like, fuck, what do I do? It starts coming out.
You just can't hold it in, bro.
Yeah.
Okay.
Alright, we're good.
I'm gonna lock up again. Okay. So the issue with doing what you said, which is just take it, is like pause, bro.
Alright, dude. Oh, you'd be the only one that would.
All right. Okay. Holy shit. So the issue with that is like, look at this risk to reward, right? Your risk is your reward is 0.6 of your risk. Right. So you need to have like an 80% win rate to be profitable. So I don't like doing that. I will have like a 30 to 40, it's higher than that, 50, 60, 70% win rate, but my risk to reward is higher. So I like to go for those bigger risk to reward plays. Meaning, if it's going in my direction, I'm not going to take profit until my take profit levels are hit.
Okay.
Like I'm not going to micromanage it and get excited because it's going up a little bit. Mm-hmm. I need to like let my fucking thesis play out. So let it play out. I'm not even looking at the chart. Maybe I'm walking away. This is over a few day period, right? We're on a higher time frame. I'm doing my thing. Checking once a day. Boom. TP1. Now my stop loss is either probably a break even at this point.
And how much are you taking profit there at that first TP?
Okay, good question. So personally, on this trade, I haven't even taken profit yet.
Okay.
So this is what I would do for a beginner to get in the hang of it. But because this is such a high conviction play for me, and like look at so many bullish divs. Like I was waiting for the setup for weeks, and like remember the sentiment here was so shit. Like people were saying like Solana's dead. Over what? Tariff news.
Like that has anything to do with Solana.
Like Solana's the same, right? So because of all of that, I kind of knew that price was going to go higher. So I actually haven't even taken profit yet to this day because I still think we're going to go up. I think I said in the chat TP1 around here. So if you're going to take profit one here, I'd take like 25% maybe in this case. 25 to 30%, right? Or what you can do, which is what I would recommend, is to just move your stop loss to break even.
Okay.
Meaning I'm not even taking profit. I'm just locking in so I don't lose anything.
Right.
And now I can still catch those bigger risk to reward trades without taking those partial take profits.
Yeah.
Because when you take those partial take profits, your risk to reward goes down. Your average risk to reward goes down, right? So now I'm letting price play out. My stop loss is at break even. I'm just letting this thing do its thing, right? Now we're live.
Over how many days?
This is over the span of like a month because we're on a higher time frame.
Gotcha.
So now, look what just happened. This would have been your first major take profit, this high here, which it just hit. You see how it just hit?
Right.
So your risk to reward in this trade.
You drew that out because of this over here.
Because of this previous high.
Okay.
So you're just targeting previous structure highs.
That's the most previous high.
There's this high here as well.
Well, it didn't beat that one though, right?
Well, there's this high right here too, right? Look at this. This so I was saying, you
And
can move
that was your first take profit.
that was my first take profit,
Okay.
right? But
if you want to.
if you want to, but because I'm so confident that price is going to continue up based on all my confidences, based on sentiment. There's other more advanced stuff like time and stuff like that. But I was confident that price was going to go up, so I just moved my stop to break even. So I didn't even take profit here,
Okay.
right? But at this point, my risk to reward is big enough, right? If I get in right here, I'm at a 1 to 3.5 risk to reward. I'm 3.5x what I put into the trade, so I can take profit at this structure high. That's a large enough risk to reward where I'm okay with taking profit now,
Okay.
So there's my TP1. At this point, if you didn't take profit yet, I'd take like 50% here. Like half the trade, lock it in. Your stop loss is at break even. Honestly, at this point, I'd trail my stop loss, meaning I'd move my stop loss like up below this low right here.
Okay.
So now if it comes down, I'm still locking in that gain.
Right.
But really, I want to see price continue to go up at least to like 220 or at least to like 200, like these previous highs over here. Because you can always look left for more take profit targets. So like 210, that's probably like the best take profit, right? Somewhere around there. So that's my main target in this trade, which would be, a massive risk to reward. Right, hold on. Let's see how big a risk to reward this would be. Right, 1 to like 6. So you're risking like 1,000 to make 6,000 on this trade.
Okay, and that's over just a month span.
I mean, so far it's been a month. To get to here, it might be a week, it might be another few months. We don't know.
Okay,
Because price can consolidate right now. We don't know. But remember, now we're going to combine everything. Now this is like the whole bring everything together moment right here.
And I'm in a trade.
Because you're in a trade, right? You're in a trade right now. But now, because what do you notice? Going back to what I first taught you about market structure, right? What do you notice now about market structure on a lower time frame now?
You were at the last lower high. Is that it?
Well, we made lower lows and lower highs, remember?
Right.
And now
Higher highs.
we're making higher highs.
Right.
So now we can use another strategy, a trend trading strategy that I use called the 1-2 setup, like the golden pocket setup. So as long as price continues to break structure to the upside, meaning it's continuing to displace, remember?
Okay, and you consider that consolidation on the lower time frame?
This would be consolidation on a lower time frame, right? But still we're making higher highs and higher lows on a higher time frame.
Okay.
So you can have ranges within higher time frame uptrends. So like, yeah, on like a 1 hour time frame right here, this is a range, right?
Okay.
Like we're kind of ranging here on the 1 hour, but on a higher time frame, remember, always go to higher time frame as those are respected more. We're in an uptrend, clearly.
Okay.
We're clearly in an uptrend, right? Like we displace, and again, we're displacing. We're not just doing like little tiny movements. We're seeing like massive, like Drake candles to the upside right here.
Yeah.
Right. So as long as we continue breaking structure to the upside, we can trade again key levels now on a lower time frame with my golden pocket fib confluence. So like, okay, if you're looking at this chart right now, where's the key level for you? Or where's the level of importance here on a lower time frame staring at this chart? Remember, this is the most recent high that we broke out of, right?
Right.
So where would you look to get in on a trade here? Because we don't want to FOMO.
So now I already stopped out my last trade, or I'm going to get into another.
You're going to get into another. Let's say you're not in a
Okay.
trade yet. Yeah.
Ooh, and it's nothing but going up?
It's nothing but going up. And you can't FOMO because it's going up.
Right.
You don't want to...
You don't trade until it breaks this lower high, or this high?
So are you saying you would take this trade right here as soon as it breaks a high?
Well, I mean, that's where it is now. So it would have to come back down, do a 20% retrace back to here.
Yes.
Is that actually
That's
right?
actually right. Yeah.
There we go.
So I don't know if this would be like 20% retrace. This is like whatever it is.
Or whatever it is.
Whatever it is,
Whatever
okay.
the retrace is from the previous high.
Right. So resistance, okay, this was a level of resistance. Again, do we have price history here? We do have price history here. If we look left, right, respected level, right? Resistance, resistance, resistance. Support and resistance is a general zone too. It's not one level in particular. It's like a price range.
Yeah.
Whereas
See what's happening in that price range.
Exactly.
There's the biggest one.
Yeah, right. You see this? So it bounced from this level in the past, right? Again, the kind of rejected here. So this general zone was our key level, right, of resistance that we've broken out of, right? And like for you, if you were just to start a trade, I just use the algo as well. Because the algo you see how the algo pull up those levels automatically?
It's already got it.
It's already got it. So like there's no really need for you to manually do it because I've already coded it.
Right.
But, it's important to know why it's there,
Right, yeah.
So, okay, cool. So you answer that perfectly, right? So we have this previous resistance that we broke out of. Resistance that's broken out of becomes support after you displace above it. So this is a valid breakout because we're seeing multiple bullish candles above it, right? We're not seeing a sweep. Like, remember that move at the bottom here? where we swept.
Right, yeah.
We had that little sweep where it's like a dinky little close, and then we immediately reclaimed.
Uh-huh.
Right, we're not seeing that here with this move. Oh, I don't know what the fuck that was.
Yeah, there's just no reclaim.
There's a massive breakout above this, right? It didn't fall back into this range and go down. Okay. So this was like a valid breakout, meaning we can take a long here, okay? When it comes down to retrace. So something else I like to use for more confluence is the Fibonacci retracement tool. Okay, so it's the built-in trading view tool to the left here, Fib retracement, from the swing low to the swing high. So what this tool does is it measures this range here. Okay, this range, this smaller time frame range and a higher time frame uptrend, essentially.
And is there ever like an amount of days or hours that you use that on?
So there's multiple different pivot points you can draw it from. So yes, I could draw it on a higher time frame. For example, from this swing low to this swing high, but price hasn't even broken this high yet. So why are we looking at lower prices before this level is even broken?
Okay.
Like we want to look at the most recent price. There's no point at looking all the way down here when price is all the way up here.
Yeah.
Because why the fuck would it go all the way down here?
Yeah.
There's no reason for it to yet. So again, we want to go to lower time frame, right? And this is the most recent key level, this key fib right here, right? And you see how this level overlaps the support zone we have?
Yeah.
It perfectly overlaps it, right?
And is that the golden pocket? Right
That's
there?
the golden pocket. So yeah, you know about the golden pockets I talk about all the fucking time. So golden pocket is a 618 and 65 levels. So that means it's a 61 to 65% retrace of this range here. Historically, for whatever reason, and the golden pocket, Fibonacci is found in nature and spirals, just everything that we use incorporates the 618 retracement for some reason. And it works really well in charts, something to do with human psychology. But the best time to buy is usually on a 61 to 65% retrace when you're in an uptrend, right? So that's why we look at this level here. Does that make sense?
What? How much retrace?
61 to 65% retrace.
From this
Of this range of where I drew it from.
From there to there.
Yeah,
Okay,
of this range. So it's not a 65% of the total price.
Right.
It's just of the range, yeah. So because that overlaps perfectly, that is our long entry. Or that would be where we would look to take a long. Okay, so we draw it out like this. So this is pretty much saying if price comes down to this level, we'll look to take a long, targeting this high.
You want a long there, okay.
If we get, So now, once we have our key level, there's one final step we need to do, and that's dropping down to a lower time frame, like a 15-minute. And remember the bullish divergences I was telling you about?
Yeah.
On a higher time frame? We look for the same thing, and actually the algo has a multi-time frame feature as well, so we can do something like this. So you can actually be on a 15-minute time frame and see those higher time frame levels. I would never go below the 4-hour levels, ever.
4-hour levels for what?
For support and resistance.
Oh, okay.
I would never go below the 4-hour support resistance zones.
Just not a backbone?
Yeah, exactly. The higher time frame levels are respected more. Okay, so let's say, pretend price is down here right now in real time. I'd be looking for, on my oscillator, right down here, the same thing I was just telling you about, bullish divergences. So as price is making a lower low, again, downtrend on a lower time frame, right, into this level, I'd want to see momentum increase to the upside.
Okay.
And as soon as I get some sort of bullish reaction here, again, it could be a buy signal on my algo, it could be a AI reversal, it could be a bullish divergence. I just need to see some sort of bullish confirmation on a lower time frame to enter a trade. So let's say price is something like this, right? Then as soon as I see that, I'm in the trade, stop loss below the low, and I'm still targeting that high.
Okay, and then all this down here is bullish, your divergences.
This is just a momentum.
That's just momentum.
This is just momentum, right? So you have like the oversold here, okay, and you have the oversold here, overbought here. You have the volume here, and then you have the bullish and bearish divergences.
Okay.
This is mainly what you're looking for, the bull and bear signals here.
Okay.
You know what I'm saying?
Yeah.
So as long as you have your key level, right, you understand that market structure is uptrending, okay, you have your golden pocket fib, then you can drop to a lower time frame, look for those divs, and then you can enter the trade, and now you're in the money, and you let that bit ride, doing the same thing.
Okay.
So let's go over, one more fresh chart here.
So you're waiting to go to the lower time frame once it gets down to that golden pocket.
Once it gets down to that golden pocket,
okay.
Then I go
just looking for the best entry you can get.
And then I'm just looking for the best entry I can get.
Okay,
Correct. There's another way you can trade too on a higher time frame, which is called limit orders. So the way I'm teaching you now is market orders, meaning you go to a lower time frame, you find your entry on a lower time frame, or you can do something called limit orders. So what a limit order would be, let's say I'm looking at hype here, would be I set limits. So maybe I have one limit right here, I have a second limit right here, and my stop loss is right here. So I'm not even going to a lower time frame. I'm just
Yeah.
setting bids.
That's just where you think that's the only place you'd take a trade.
That's the only place I take a trade, yeah, on this chart. So I would just set limit orders here.
Okay.
So there's two ways you can do it.
And market's just you buy it for the exact price it is at that second.
In real time.
It buys it once it reaches to that level.
Yes.
Or that price.
Yes. So it's like if price reaches here, it enters. It
and you
fills
set
me.
that limit on an amount of what'd you call it? Confidence is what?
Confluence.
Confluence.
Yeah.
Once you have a bunch of confluences at one particular zone, you set a limit order.
You can set a limit order there.
And that's when it's going
yes,
to shoot
but
off. When you think it's going to get there.
Yes.
It hasn't set up yet.
Yeah, it might not get there, right? Your limits might not get filled.
Right.
So the other thing that's what's wrong with limits, or not what's wrong with limits, but it's a little bit more risky, is because if you're not going to a lower time frame and waiting for a reaction, let's say price is coming down to this level, beautiful setup, and then there's fucking news, like some terrible fucking news. So what happens? It just fucking rips down and breaks through your level.
Right.
And then you get stopped out in the trade.
And stopped out right away.
Right away. But if you were to go to a lower time frame, right? If you were to go to a lower time frame for entry, then you're not going to get stopped out because you don't have confirmations on a lower time frame to get in. So you can save yourself the stop loss if you're waiting on a lower time frame. You know, because you're looking for other
it all
things.
reads the same on a higher and lower time frame.
What?
Does it read the same? Like,
Does what read the same?
Well, does it have the same movements from a lower time frame to a higher time frame? Like, do the candles look the same? Are they falling the same? I know in a lower time frame they can fall quicker, or not quicker, but there's more movement shown.
There's more movement, exactly. So now you're talking about candles. Okay, this is good as well. So within, so candles are kind of confusing. A lot of people generally they don't even know how a candle works. So within this candle, right here, let's take this big bullish Drake candle on the daily.
Yeah.
Within this daily candle, there's a bunch of other little candles on lower time frames.
Okay.
Right? So like on a 4-hour time frame,
There's all the candles.
there's all the candles. And then it's all fractal. So you can keep going down to a 15-minute and look how many fucking candles are on a 15-minute.
Yeah, all that.
But on a daily, it just shows one candle, you know?
It's just that one.
It's just that one.
Okay.
So on a higher time frame, it can help remove the noise of the lower time frames.
Yeah.
That's why we
Makes
like
sense.
higher time frame. That's why we like higher time frame levels. We like to use higher time frame market structure. We like to use higher time frame confluences because it removes a lot of the noise. You know, you're not staring at a bunch of little fucking candles.
Right.
It gives you a better view of what the market is actually going to do. You know?
Yeah, no, that makes sense.
I'm gonna put the chart to. We're gonna put the levels to chart. Actually, it's not enough price history. Let's go like an 8-hour. Okay, cool. So let's do another example. You're gonna actually enter this trade now, for me.
Okay.
Okay, you're gonna enter the trade for me. So again, like my algo is kind of a cheat code, because it kind of like removes the guesswork. You know, so it's like not really a trick question, but kind of a trick question. So I'm looking along Hyperliquid right now. The reason is because it's in an uptrend, right? You can clearly see breaking structure.
Broke structure there.
Right, it's displacing. It continues to move up with large bullish candles, right? Higher highs, higher lows,
Yep.
right? So now I want to get in on a retrace. So where am I going to look here for a
I
retrace?
mean, it's right there on that top one there.
It's this one right here,
Yeah,
right?
yeah.
Exactly, because that's the most previous,
Previous high.
my previous structure high. Exactly.
Why is that so simple?
It's so fucking simple.
And
It's
you
so
want-
fucking simple.
You want to get in on that at the 8-hour? Does it matter what time you do? And why do you pick the 8-hour over something?
Okay, so I just happen to be on the 8-hour, because I just like using it. I like using the 6-hour actually. So I'll do the 6-hour, but it's the same thing.
Yeah, it is the same.
Because the price points that we're looking at are the same price points. It's 21 to 22, regardless of whether we're on the 4-hour, the 3-hour, the 6-hour. It's all the same shit.
Now go to the day or something or week or whatever, and show me why this caught your attention.
Okay, why this level? So it was actually on a lower time frame, this one.
Oh, this did.
Because it's a previous structure high here that I want to enter on a retest.
Yeah.
Or it's a previous structure high.
Right.
And also, if we look left, again, there's price history here. So we're support. You can see right here.
Yep.
Failed it. No, it failed as resistance, right? Resistance, and now resistance. And now we look to flip this into support, right? We broke it,
Okay,
closed above,
yep.
displaced, and now we're looking to flip this into support and go higher,
Yep.
right? Another reason why this is also a good level, not only was this a strong displacement move up, right? Previous structure high. We also, again, if we take our fib tool from the swing low, look at this. Overlaps that level, right?
Yeah.
Maybe not to a T. It won't always be exactly over it.
Right.
But we have our golden pocket from the swing low, and we also have our 786, which is right below this golden pocket at that level.
What's 786?
So 786 is another fib level I like to use as well. So this is like your optimal trade entry. So I say golden pocket, but it's really the 618 to 786. This is like your zone here because it won't always perfectly bounce off the golden pocket.
Yeah, that's like a tiny.
It's like a tiny. So yeah, this is like your main zone here, right? So we have overlap, which is good. We're just looking for confluence. So because we're in an uptrend, we have that golden pocket fib. Now where would you look to enter the trade here? Like if I have my entry, where are you looking to enter the trade?
It'd probably be in between your resistance and your golden pocket, right?
In between?
Or anywhere in there.
So I would do it right at this previous structure high here. I would start to look for longs.
The previous one? Okay.
I would look to start here, right? Something like that. And then
not something you do a limit order, but something that you'd be
this is something
in live.
Yeah, I would like to go down to a lower time frame at this zone, right? In this general zone here, right? There's also this area of consolidation on a lower time frame, which we might retest. So some other more advanced stuff, but like order blocks here as well. But a lot of confluences here telling us that if price comes to this level, we should look to enter a trade. So yeah, you're right. I'd have my entry right here, go down to a lower time frame, and then as I see those bullish divs on a lower time frame coming into this level, something like this, I'd enter the trade.
Okay.
And that's it.
Yeah, once you see the bullish div go to the upside and it's in that level, you buy.
Yeah, you just buy and you put your stop loss below the low.
Okay.
So, or if you were to set limits on this trade, which I think you honestly could do in this scenario, just because hype is so strong, I doubt we're going to break structure at this point, right? What you could do is you do something called dollar cost averaging. So this only works with limit orders, by the way. So you have one entry right here. Let's say I want to account for some fuckery, right? Some volatility. I want to have a second entry right here, and my stop loss is right here. So now I have a wide stop loss, and I have two entries. So if price comes down and bounces from my first entry and goes up, I'm in profit, right? Or if it goes lower and fills my second entry, now my average entry is lower.
Is in the middle. Okay.
So I'm still getting profit. You know what I'm saying?
Yeah.
And also, if I get stopped out on this trade, let's say my stop loss is right here, and I get stopped out for whatever reason, there's news, whatever, it fails this level. Now, instead of getting stopped out at an average price of right here, my average price is lower.
Right.
So now I'm actually saving myself a little bit as well. I'm
And
reducing risk.
And that would have been perfect for the last one that we did earlier in the video because it jumped down past our other one.
It retested, so it would have been nice to have bids going down to get a better average entry.
Yeah.
Exactly. So that's pretty much it, dude. Like that's pretty much it. It's pretty much market structure. You're looking for, again, very important that you have displacement to the upside. We didn't get into fair value gaps today or inverse fair value gaps. There's other shit you can use to help add confidence or confluence, as I call it. But pretty much for like a brand new trader, like someone like you who's never even fucking looked at a chart, this is all you need to become profitable. And like I said, the reason I have my algo is because it will kind of remove the guesswork for you. So all you have to do on your side, if you're trading with the algo, is just to make sure that you're in an uptrending market. That's all you have to do, right? Like that's the only thing you have to put in on your end. And then you just load up the algo, you have your level, you know you're in an uptrend, you wait for your confluences, and then you enter the trade. And that's it. And like right now, it's very easy to make money in the market because shit is just fucking going up.
Everything's in an uptrend.
Like everything's going.
Like this chart, what is this?
This is on Sui.
What is Sui?
So Sui is another coin. So let's go.
So like, where's it break through?
So let's go to the daily time frame. Okay, we're gonna start on daily time frame, just to make it easier. Okay. Same thing kind of here on a daily time frame, right? Similar formation, right? We have bullish divs on a daily.
Yep.
Sweeps the slow.
Yep. Sweeps the low.
Right, and then right here we break structure.
That's okay.
And
and that's the structure point right there.
That's the structure break.
Yeah.
And you notice how there's massive displacement.
Yeah, just Drake.
Just fucking drakes on drakes on drakes, right? Just fucking boom, breaking to the upside. Now, sometimes, one final thing here. Let's go into replay mode. This is actually very important too. So we have our key level here, right? That the algo marked out, right? Support, support, resistance, or you could also maybe say this previous structure high here as well as part of that. All right, we let price play out. Right? We're looking for a long here, okay? Maybe we have a local golden pocket on a lower time frame. Maybe we have a golden pocket here, right? We draw our fib, maybe not. So we don't have a fib confluence in this case, but because this is such a strong level, I'd be looking to take a trade here anyway, right? So again, we have our key level. Watch this when price comes down, doesn't fill us, doesn't hit our level. You know what I mean?
Yeah.
It didn't hit, but we're okay with that because we have a system. We know that on a long enough time frame, we want to wait for those high probability setups, those A+ setups. So sometimes it might not come down to our level. We have to be okay with that. Because sometimes it just won't reach it. You know, it's like in this market condition, it's just too strong, right? But now on a daily time frame, where would you look to enter a long position here on a daily, based on what I just told you?
I mean, right at the previous high.
Right here, right? Yeah. At the previous daily level. Because we're still making higher highs and higher lows. We're displacing, massive candle, right? So we can look for another move like this, okay?
Yeah.
And then if we draw our fib, remember our fib?
Yep, there it is.
Overlaps as well, right? So this would be a really good long idea on SUI. I don't know if it's going to reach in this case just because price is so strong. I like the hype setup a little bit better. I think this is more likely to hit, right? Something like this. And that's pretty much it. It's just level to level. You're looking for trending markets. Obviously, since we're in an uptrend, this is all longs. But if you're in a downtrend, it's going to be the opposite, right? You can do the same thing going to the downside, right? Looking for shorts. Doing the same exact thing. But since we're in an uptrend, obviously, I can only show you longs. Our bias is pretty much long. And also, we have something really nice in the algo called the trend cloud. You see this blue cloud right here? Mm-hmm. You see it bounces from it, rejects, then flips, bounces. So this is just another form of confluence telling us what the trend is.
What's that based off? Twitter sentiment?
So this is actually based off a few different smooth moving averages. So do you know what a moving average is? Kind of like.
I mean, I understand what a moving average is.
Yeah, yeah.
I mean, that seems pretty simple.
Yeah. So moving average. So let's say I'm on an 8-hour time frame, right? It would get like the average, like all of this price action here.
Yeah.
In the past, certain set look back. So maybe the past 100 candles. The average price on this time frame in the past 100 candles would be around here.
Okay.
So this is anywhere from, I think it's like the 50 and the 200 EMA overlapped. So you have this general zone here, you know what I'm saying?
50 and 100 EMA.
Yeah, 50, I believe so. Let me just confirm here. It's not in the settings. I believe it's the 50 and the 200 smooth EMA in the cloud.
What's
right?
EMA stand for?
Exponential moving average.
Oh. Okay.
So it's, yeah, same thing, right? So all it's doing is just it's giving us a little bit more data, making it a little bit more clear that we are in an uptrend. And also, this trend cloud perfectly overlaps this level as well, right? Because this is going to continue to move up as price comes down because this is kind of lagging. It's a moving average.
Right.
You know what I'm saying?
Yeah.
So even if price comes down, the moving average is going to go up. You know? Does that make sense?
Yeah, it does.
So we have the bullish trend cloud also overlapping this level, just telling us that we are in a bullish trending market. We can look for longs on a retrace. We have our golden pocket fib from this swing low, right, overlapping. We also have it from this swing low overlapping. So this is a really good level. If price comes down to this level, this is a good long idea. We can take the trade, you know?
Okay, yeah.
So that's pretty much it. What do you think? Is it like pretty simple or like kind of overwhelming?
No, that's pretty simple.
Pretty fucking simple.
I should do a video of me now. I'm on a laptop fucking marking this shit out.
Yeah, dude. We'll do that part two.
This is all your algo stuff. Like, I don't know if I'd be able to do this by myself without this.
So, yeah. So everything on here is this is the algorithm that does this.
Yeah.
Like,
I think I could set it up. I just wouldn't know where to fucking click and all the extra stuff.
Yeah, exactly. So that's why like we have the algo, so people could just fucking load it up.
Okay.
And then boom. But it's not like a trading robot.
No.
Like
right.
you're not gonna get rich because you have a fucking indicator, you know.
There's no such thing as like a plug and play.
Well, we actually do have a CRT bot. It's up 100% last month. We actually do have a trading robot.
Why isn't my net working that?
Dude, I that's like a fucking good question, but I gotta put more money in that. But again, all right. So I forget where we were. We just had some technical difficulties. Camera died, but we're back. So like I was saying, yeah. The algo will just remove the guesswork in finding the levels, giving you the confluences. We also have our AI reversal buy signals as well. We have the trend bar signals. All right, so we have a ton of different shit here that can help you out, essentially. So that's the algo in short.
Yeah, well, let's break this down quick.
Yeah.
So the 3 bars are price history, right?
What do you mean the 3 bars?
Well, your 3 bars that go.
Right. So these are my key support and resistance levels.
Right.
Or zones. It's not a particular level, but a general zone.
Right.
You're looking for levels with price history. Not they won't always have price history. So that's again up to you to look for the levels that are key. So for example, this one right here was a key level, right? Resistance.
Yep.
Resistance. And then what do you notice after you flip this level?
It broke through.
And then what? We retest that support.
Yeah.
Again, like look at right here. Right? We have again resistance, breakthrough, test. Right. Every time that a resistance is broken in an uptrend, it will usually test it again as support. So if it ain't broke, don't fix it. Keep
Okay,
riding
and
the
then
trend.
these waves in the middle are your average candle, your average candle of 100's moving. Right?
Yes, so that's a trend cloud. Yeah.
Trend cloud. Okay,
Trend cloud,
and
yep.
That makes sense.
We have a bunch of other shit too.
The one on the bottom
is the oscillator.
is the
Momentum.
oscillator.
So
that's kind of similar to your average.
yeah, it is. It is similar, but okay. So here's the other thing too. You notice how we're getting bearish divs right here,
Yep. And then at the top there.
and overbought,
Yeah.
but it's not really reacting. Like it's still going up.
Right.
In a bullish trend, it is normal for price to be overextended. It is normal for momentum to be really high up.
Okay.
That's why you need to use market structure and trend together. You can't solely use, divergences without having a bias in mind. You call it a bias, a long or short bias for the day.
Right.
So for example, the only divergences here that would be useful would be these bullish divs down here, because we're sweeping this low. We're at a higher time frame key level. Those are the only ones we're gonna take serious. So we're not gonna not look for longs just because we see a bearish div. Because why? Well, structure is still breaking structure bullish.
Right.
So that's just a confluence for a lower time frame entry now. You know what I'm saying? Now, if you go to a lower time frame, see how the oscillator changes, right? Because you're on a lower time frame now.
Yeah.
So now you can go to a lower time frame. That's what I was saying. So you get that entry. So now, right, you have your key level, right? You sweep those lows. Again, bullish div.
Yep.
And you understand that higher time frame market structure is bullish and trend cloud's bullish. Now you can enter a trade, right? Right here. Boom.
Yeah.
Right? That sort of thing. And then on a lower time frame, you get a bear div here. Price goes down. But you're probably not going to take this short, even with this bear div, because higher time frame is still bullish.
Right.
So because higher time frame is bullish,
Yeah.
I only want to look
And
for
higher
longs.
time frame trumps all this lower bullshit.
Higher time frame always trumps the lower time frame because that's where your bias is formed off of.
Okay, so let's break this down to like some steps.
Yeah.
First things first, go to high time frame,
Mm-hmm.
see what the market structure is, or what it looks like, which way it's going to.
What your
which
bias
way
is.
it's going.
What your bias.
Yeah.
Yeah, what your bias is.
Go to a higher time frame, set up a bias, bull or bear.
Yep.
If it's bull, go back on price history.
Look for levels with price history.
Levels with price history.
Yes.
And then see if it breaks through one of those levels.
Yep.
Right. And
With
then you're-
displacement.
With
You need
displacement.
to. Yes.
Let's see displacement quick.
So right here would be displacement. So an easy way to tell whether it's displacement.
With displacement, then that's where the big drakes.
That's what the big drakes. Yeah,
Okay,
exactly.
and
Big
then,
drakes.
And then from there, you're looking for a retrace.
Retrace.
Back to your key level.
Back to
Or
a key level. Back to my key level.
Yeah,
with the golden pocket fib
with the golden pocket.
overlapping.
And then you take that trade.
And you take that trade.
There's your outro.
That's fucking it,
There's
guys.
your outro.
Come on, man. That's fucking
And
good.
I swear, on my mother's grave, it's Mother's Day, by the way.
It is
on my mother's grave. I didn't know anything about this.
Yeah, he didn't. So
there's your outro.
if he can do it, bro, in a fucking hour, you guys have no fucking excuses. That's actually a fact, dude. Because we've been going at this for fucking an hour, and he's already fucking knowing more than some of you guys. So put the fucking time in, learn this shit. It's not that difficult, is it?
No.
I mean, it's real.
do this.
I mean, in theory, it's simple. It's harder to execute, obviously, like
Yeah.
the psychological.
Yeah, once there's.
Once it's at your level and you're fucking shit.
$1,000.
But like it is simple in theory. You know what I'm saying?
Yeah, in theory, it's simple for sure.
All right, guys. Well, you know what to do. Leave a like on the video. Subscribe to the channel down below. Also, if you guys are interested in buying or selling boats, I'm gonna link this guy's Instagram down below as well. Tell them what you do real quick.
Oh, I'm a yacht broker here in South Florida. I can sell boats from anywhere in the country and the world. So if you're looking for a boat, selling a boat, come holla. AJV Boats on TikTok, Instagram, YouTube.
There you go, guys. You
I'm
need a
gonna be a
boat.
trader now, so.
Let's get it. All right. Catch you guys next video.